What's going on, guys? Welcome into today's episode of Money Moves. As always, your host, Matty, co-host, Mr. Ryan Breedwell. We cover all things stocks, real estate, personal finance, a little bit of politics.
Poquito.
All things that impact your wealth building journey. We've got last week we had a lot of big data on CPI.
Lit.
So we'll unpack that a little bit.
Yes.
With lit.
Yeah, you had a baby.
I had a baby last
you
week.
didn't have a baby.
Yeah, Marie
had a
She
baby.
did all the hard work.
You would have made medical history if you would have done that.
Oh, yeah. There's a
would.
blue
But
pregnant man emoji,
I was gonna say
according to Apple.
There is a state where that can happen. I think we're in it.
Jeez. We've officially got a new most valuable company in the world that overtook two other large giants. We'll talk about that.
I know.
We've got some interesting political updates.
Mm-hmm.
We've got some interesting insights and probabilities shifting towards rate cuts or not. We'll talk about that. And we got a little bit of commercial real estate data coming out this week. So first and foremost, I want to make sure that you guys know we have all kinds of great stuff for you guys at millionaireMindcast.com. Be sure to check that out. Don't forget to take advantage of your free financial X-ray by texting the word X-ray to 844-447-1555 to connect with Ryan and his team. And if you're an accredited investor, you want to get on my deals list and see what deals I'm investing in or others have access to through the Millionaire Mindcast family, you can text the word deals to that same phone number, 844-447-1555. All right. First and foremost, where do you want to start today?
Shoot.
You want to get after a little bit of political spiciness just to get that out of the way? We can shift over. As of this week, 500,000 immigrants could eventually get U.S. citizenship under a new plan and policy from the Biden administration. That's got a lot of people up in arms. Obviously, there's been millions that have come over the border illegally, and this seems to be, I don't know, somewhat of a part of their plan as it continues to unfold. But the question I think most people are arguing back and forth right now is, will it make a difference come November?
500,000, no.
What about the 7.2?
That probably will, because a lot of the states allow people to vote without, including our state, without a ID, which I don't even get that. Makes no sense. You have to have an ID to do such simple
many
things,
right?
Yeah, but you don't need one to put somebody in power of the United States. It's wild. It's. I think what it is, it's to put a Band-Aid on it to make it look like he's doing something, even though what he's doing to fix immigration is he's letting some illegal immigrants. I think they have to have been in the United States for 10 years. They're mostly targeting women. They're trying to get women that are married with kids. They're prefacing that, I believe.
Well, I think that's what from an optics standpoint, that's outside looking in what they're saying.
Yeah.
I also know that there have been whistleblowing camps in different parts of the country that are saying they're
like whistleblowing.
Yeah, just like that. That they are passing out ballots and teaching immigrants that are coming through how to get SSNs and how to essentially vote come November in migrant camps, them literally posting signage of, if you go through this process, you will have to vote for Joe Biden to come. So again, is it enough to tilt and sway the scales? That's what people are concerned about. But interesting times right now when it comes to things heating up heading into November, specifically trying to show that it's not a weaponized Department of Justice and two-tier system, Banana Republic. They have gone forward and indicted and charged Hunter Biden with, what was it, 3-4 felony counts, something like that?
Yeah, possession of a firearm. All I know is the possession of a firearm.
Yeah, something like that, but very timely to see them doing it right now.
Mm-hmm.
To me, it seems like they're just doing it as a little bit of a smokescreen to show that they are upholding justice.
At least he was indicted, though. That's it. What if he wasn't? That would make me even more upset.
Yeah, I think when you look at maybe Bill Clinton's mistress while he was in the White House having an affair, paying $850,000 in hush money where she's legitimately holding the check, and him then later acknowledging it and no charges coming about that. But then you got, the Trump thing going down. Those are things that are a little bit of a head scratcher.
I agree.
But that being said, I don't know if there's too much they can do to keep this man out of the White House. I don't know.
There is.
My gut says they're going to do everything in their power, as they're showing they will, to keep him out of the White House. We saw this last week that a bunch of celebrities are starting to come out and endorse Joe Biden, and they're really trying to push hard for...
I don't know if it's a bunch, but we did see a few.
A few.
Yeah.
Jack Black and the Speedo, right? That's at least 2 dudes right there. But I think it's going to be interesting. Charlie Kirk had noted on his, and I'm curious to get your thoughts on this, be ready for a July surprise. It's very possible they pull Joe Biden and sentence Trump to prison on July 11th. The entire race could be about to change. Watch closely which Democrats get the ruling class treatment in the coming weeks. If they pull Biden, is Kamala going to be the replacement? Whitmer, Shapiro, Newsom? Be ready. Something is coming. Something big. What are your thoughts on that? I did say that I thought he would not be.
He's just
come November.
It's just so deep. I don't know. Shit, anything can happen at this point. We've seen it all in the past 4 years.
That would be pretty insane.
That would be pretty out there. Is it possible? Somebody said it could happen, but I don't know how likely it is. A satellite could fall out of the sky and hit a Taco Bell. It's also a possibility.
It's been interesting from the perspective of Newsom has been MIA in California for the last 4 months.
He's been on his social media. I think he's traveling. Because he's posting videos on his social media. Hey, look at all these businesses that do business here and stuff. Honestly, God, it's fine with me. I'm not upset that he's not doing anything.
Oh, shit, California is not getting any better. That's for damn sure.
It's getting hotter.
It is getting hotter. So I think it'll be very interesting to see what are you saying? Is it going to be Joe Biden or is it going to be somebody else?
What Biden. He's already agreed to the debates. And maybe people are saying that as, this is the fallback if he gets smoked in the debates. But what are you going to do? That would look terrible for them. Pulling out a candidate.
It would, but it's when you're at rock bottom and it's already so bad as it is, what could be worse than getting that person out of the way and saying, hey, if we're going to go down swinging, at least we're going to go down swinging with somebody we think will fit the bill a little bit better, because the data, everything that we're seeing has shown that he ain't the dude, right? That's my thought, and I do think that's something, I've been saying this for a while, I think there's going to be a curveball.
Only thing I can see is them pulling RFK over. Because there's nobody else that's popular enough.
I would love to see Trump and RFK align and get behind one another.
I don't know if I like RFK.
I like him.
I've seen a lot of his old stuff.
Him. I think he's a centrist, kind of left-leaning. But I think if he could align and be a little bit more of that middle ground that Trump, I think, lacks sometimes in the diplomacy of pulling people from the center and the left over, RFK could be that bridge. And I think there's a certain role maybe for him in the cabinet, not necessarily his VP.
I think he's going to pick Ramaswamy.
You think so?
Yeah.
As his VP?
Yeah.
I think he'd be great for Department of Homeland Security or, something along those lines.
He's the one.
He's well spoken.
And he's the most outspoken for him.
Yeah.
That's what Trump looks for. He knows exactly what he's doing. He's playing that flute, man.
That is true. I love seeing this bill. I think we saw this in Louisiana not too long ago. Tennessee's Governor Bill Lee approves a bill authorizing the death penalty in child rapist convictions. Again, just another example of we should have this in all 50 states. The fact that it's not.
It would definitely hinder. Well, in California, they have opposite type law. They have stuff that
Oh no, though they label them as a special word because we don't want to mislabel them and offend pedophiles. It's minor attracted persons. MAPS is what they call them, and we got to be kind to those people. You don't want to.
The front of my car is majorly attracted to those minorly attracted individuals. Nothing good to say about those types of people. Just the scum of the earth. I wouldn't pick anything easy on them. Anybody that takes advantage of a kid, are you kidding me?
Yeah, that's where it just
pretty
blows my mind that there's actually people fighting legislation against things not even as extreme as a death penalty, right? But maybe life in jail or even more aggressive convictions. And it's crazy that people are actually fighting against this stuff. Okay, last one. According to reports, the House of Representatives passed a provision within the annual National Defense Authorization Act that mandates automatic registration for selective service among men aged 18 to 26. This legislation sets out the U.S. government's military and national security policy priorities for the upcoming fiscal year and includes a budget of $890 billion for military spending, reflecting a $9 billion increase from 2024. What are your thoughts on this? A lot of people are getting freaked out and all upset.
It's already a law. You had to sign up for selective service. It just does it automatically for you when you register to vote, I think. So nothing.
I think what a lot of people not understanding what this means is going, we're in a place where, oh my gosh, if this is in the headline news, that means there's going to be a draft. That means they're going to start needing to pull more people forcefully into the military through that draft provision. We're heading to war. What is this foreshadowing? The fact that, look what they did to our military with the Biden administration. I know a lot of people that have been in the military for a long time, some close friends, and from top down, a lot would say our military is much weaker. The culture, the sentiment within the military is much softer. And when you've got as many people that got pushed out of the military for maybe not choosing to get the vaccine, or you've got a lot more maybe non-traditionally accepted military things now being forced as initiatives throughout the military, there's not a lot of people that are necessarily excited to go and join the military as it once was.
I agree. I think that it's all good. The little male bravado type old school military attitude could weasel its way back in, and there's a lot of things the military had to improve upon. I think that there's definitely room for women to be in that role as well. But yeah, the softness in the military right now is definitely there. I still think we're the best military in the world because of how much money we spend in our technology.
And that's not going to go anywhere.
That's not going to go anywhere, but we've come down from where we were and getting back to that nationalism, patriotism. I think that's good, and I think it's also due. I don't have this little bit of information, though. I've seen it going viral. It's not really anything. It just actually, in fact, I would say it's a positive, because if you miss signing up for selective service, it's a fine, and I think it's also a penalty, and you can get jail time for it as well.
Well, let's shift over to the market. We can talk about, obviously, what the overall sentiment was after Wednesday's CPI and FOMC meeting, what Jerome Powell noted in his comments and what the takeaways were there. What was, based on last week's print, the expected versus what actually came in, and how did the market respond to that, and what were your thoughts and takeaways from Jerome Powell's speech?
So I believe we had core come in line, and we had headline actually print a negative 0.1, if
Correct.
I remember correctly.
Yep.
And then I remember during Jerome Powell's remarks, he indicated essentially there was going to be a rate cut this year. It was looking like, and even the Fed speak that happened today and later and during last week and the beginning of this week has indicated that September is looking right now, subject to change, folks, but right now,
we got an 11% cut in July chance, an 89% pause chance.
Yep.
And then we have September, 75% chance of a cut and a 25% chance of a pause, which I think last week when we reported, or maybe the week before,
it's about 50.
I think it was sub 50.
It was like, I think it was pretty much 50-50, like 49.7 to 50, or like that. It was essentially half and half. But yeah, it swung quite a bit. And that was because of last week's batch of data was all pointing in the right direction. And
Downward.
We actually even saw auto insurance premiums finally tipping over and starting to come down for the first time in a long time, which is one of the main things holding up inflation data.
It was a 42% increase year over year.
Correct. So
that's I don't know about you, but my insurance, I think
it went way up.
Mine went way up.
Yeah, I'm paying almost $10K a year.
And I know there's a handful of providers that actually I just got a notification like a month ago that they're pulling out of California altogether, and there's a new company that's taken over my policy. And
yeah, I have Nationwide. They're still thugging, but that bird is milking me for all the cash. Nationwide's been good to us. They're just expensive. I mean, you get what you pay for.
So we had the overall sentiment, though, from Jerome Powell was,
there's going to be cuts. Inflation's has continued to move in a downward trend. Things are catching up. They need to be caught up. Shelter data finally is catching up. Rent data is finally catching up. And it looks like auto insurance is starting to catch up. So now they're going to say, okay, well, we need to time this out so we can get a smooth, soft landing. And now people are worried that they're waiting too long. So the same people that 3 weeks ago were like, oh, we might need to see rate hikes or no. Oh, I wonder if they've waited too long now.
Yep.
So that's why it looked like where we are at the beginning of the year, but we had a lot of stuff to unfold. That stuff has unfolded. Items have caught up to where they need to be. I'm fairly certain we're going to continue on this path where we're going to get more and more conviction towards a cut in September. And then I would not be surprised, I hope I'm wrong, but I wouldn't be surprised if after the first cut we see some volatility like a pullback, because people are going to then sell and reallocate, and it's probably going to be a big risk on time. So I wouldn't be surprised if there's some pullbacks.
Talk about that really fast. And when you say risk on time, what does that mean to you? What should that mean to investors in terms of their psychology of when it shifts to a risk on time?
If we can remember in April was a pretty rough month for the market. So if we can remember going through that, and people were like, oh, okay, the market pulled back about 5%. Maybe this wasn't good. And then we fully recovered in May, and through June now has also been a pretty good month. S&P is up well over 15% year to date. You have things like NVIDIA continuing to power forward after the stock split. You got Broadcom announcing a stock split 10-1, same as NVIDIA. All these positive catalysts in the market. And that's why I was saying we were wrong earlier in the year for the rate cuts. That the data was pointing towards that prematurely, obviously, but the market didn't need it. And I thought to get to where we are right now, the market might need. So the thing that is you have to ask yourself is, if money was easier to get, would the market pull itself back, or would it go forward probably at a faster pace? And maybe in the short term, it'll pull itself back. But my guess is people will sell out of value plays, layer out of fixed income, take the money that's in money markets and start piling it into higher beta assets, stuff that has a higher risk than the stock market, S&P 500 as a whole. And that's going to hopefully reward those people. And I think it will in the long term. Looking 3, 4, 5 years from now, people will be sitting back, and I think the only people complaining will be the ones that didn't take action or didn't do something proactive when it was time to do.
I am always interested to see where consumers still think we're at as a whole. We got retail sales coming out this week. Yeah. So that'll be interesting to see where that comes in. And did that already? It
already came out. It came in.
Yeah. It was a little cool.
It was. It was just flat.
Previous was 2.74%. It came in at 2.27%.
Yeah, it's flat. If you exclude auto, which retail sales ex auto, that's the report, and I think that was down 0.1%. So that to me is not anything concerning, and I don't think the market really cares about that. I think the unemployment rate is the metric in that area that the market is balancing right now. If that can continue to slightly tick up, we need that around like 4.3-ish from where it is now. I think that needs to be up another 30 basis points.
Affordability is still a challenge for a lot of people, so that's eroding a lot of people's probably confidence as a whole. But as we're seeing in the data, things are trending in the right direction. Some of the areas of inflation that are much higher, and these are, to a lot of people, many basic necessities. You got car insurance inflation at 20.3%, transportation inflation at 10.5%, hospital services at 7.2%, car repair inflation at 7.2%, electricity inflation, my electricity just went up like 9%, 5.9%, homeowner inflation 5.7%, rent inflation 5.3%, food away from home inflation at 4%. So again, I think we're seeing the core stuff start to fall back in line, or at least trend back where they want it to be. But inflation has been above 3% for 38 consecutive months now, which is just...
That's crazy to me. That's 3 years.
It's wild, right?
I know. The whole term of Biden, pretty much.
Yep.
That's wild.
Yep. So, again, those are all just things to keep in mind. But here's what I did see that I know you would like, that I thought was very interesting, which is that even though financially things have been, for some people, really good, for other people, very challenging, the people that did really good were the people that have an investing mindset. Whether you were in real estate, whether you were in the market itself, and I know this is a statistic you'll like. You can maybe speak to it a little bit more. Americans in the first quarter earned about $3.7 trillion from interest and dividends at a seasonally adjusted annual rate, according to the Commerce Department, up roughly $770 billion from 4 years earlier. We saw Americans have more investment income than ever before per Wall Street Journal. And when you think about those who stayed invested in the market, they got rewarded in high inflationary, challenging times when we're talking about economics as a whole.
Yeah, I should have pulled the report from, I believe it was either Fidelity or Vanguard, and they did a study from 2020 to present. I think it was through April of 2024 of this year, and it said it was like studying investors and behavior and then returns. And it said, I believe it said people that used an advisor, likely they were using their data for their advisors, but people that used an advisor to manage their assets got double the return than the regular investor did because they were less emotionally inclined to make decisions and more so made decisions based on data and, to your point, stayed fully invested.
I want to say just staying in the market. You don't have to do anything at all to yield those returns.
You got to put money in there.
You got to put money in, but I'm talking like
and be
I didn't
patient.
have to go swing a hammer. I didn't have to go find a house to buy, and remodel and get a tenant in there. I didn't and that's the beauty of having that holistic approach to your investing, right? I didn't have to do anything but literally just continue to make sure that auto draft was happening every single month.
Yeah, and it's not your rate of return, but I know that you have 25% more in your account balance from contributions and growth right now than you did in January.
Yep. So there's the power of the compound effect.
Yeah, so cumulatively, that's a bet.
And so that just reflects right in that statement of those that stayed invested, those that are investing, they got rewarded. And you saw that from compound interest and dividends coming out, depending on what your portfolio looks like, which is obviously if you're not in control of your portfolio, you're not with both hands on the steering wheel right now, especially in turbulent times as we are, now more than ever is the time to be going back through and with a fine-tooth comb, making sure that you're allocated properly to achieve the goals that you're looking to achieve and when, which is why obviously Ryan and his team do the free financial X-ray, which is available to all our Million of Mindcast listeners. You just got to text the word X-ray to 844-447-1555. That'll connect you with him. But I did think it was interesting, and I don't know if this is maybe telling a little bit more, and this is obviously, when you look at these studies, you have to take it with a grain of salt. You don't know what their data set is, how large it is, who's actually replying to these things. That being said, this might be aligned with the sentiment that we're also starting to see and hear a little bit more on, which is 46% of the U.S.'s middle-class workers are now slashing or completely cutting out contributions to their retirement funds, which obviously we know is a big no.
I was going to say, we just talked about data last week. BlackRock just reported that inflows are at a record high, and they're not reporting on just their funds. They're talking about inflows to equity-based ETFs and mutual funds are at a record high. I think it was an average of $9 billion a day. Not like a little bit, a day. That's a ton. So yeah, I think you got to be careful. That's probably a data set of less than 1,000 people, and the people they probably asked probably subscribe to a certain newsletter. It's almost like asking people at Fox, what do they think about Joe Biden, and then asking people at CNN, what do you think about Trump, and knowing that you're going to get a bias to the answer.
Absolutely. Yeah.
So yeah, you're not going to get stock picks from Lear Capital when they're telling you to roll all your money into a gold IRA. That's just how it works. Yeah. So yeah, I don't see that data panning out to being factual. I think what's actually starting to happen is, even though cash is still paying a good yield, I see advisors, and I'm seeing mainstream news and analysts saying, hey, now is probably the time to take cash and put it to work, because this is probably the tail end of the yield curve for money market accounts and stuff like that. We've already seen the 2-year, the 5-year, and the 10-year all pull back pretty significantly. Mortgage interest rates are below 7% for the first time again, I think, in 6 to 8 months. So that's, everything's starting to lead us towards back to normal costing money. And everybody who's put their money to work and stayed invested, although had some trials and tribulations to go through a market cycle, are now better for it, have more money, and have been paid the whole time to go through that cycle. And that's the whole point of that original data set that got us on this. The most amount of income in the past 4 years paid out to invest via investment income to investors for staying invested.
Yep. And just going back to the consumer, are the coffers running dry Per a statement from Barclays today, U.S. consumers are holding steady. We acknowledge there are some adjustments in spending that we're seeing, but we are far away from feeling like we need to sound any alarms.
Yeah.
And when you look at the amount of capital that's still in savings, excess savings remain more substantial than people are commonly noting.
Correct. That's why when the data sets come out and say the opposites, it's
Yep.
complete. And I don't know where they're getting the data from, because in fact, we looked at the St. Louis Fed's data sheet, which is probably going to be one of the most accurate, has no bias. It's
Yep.
just pure data, all-time high.
Yep.
Not even close, like quadruple almost what it was in 2019.
Shifting over to crypto a little bit, the world's largest stablecoin Tether has created a new synthetic
Alloy.
dollar backed by gold per the block.
Alloy.
What is that?
That is the name of it. It's called Alloy by Tether.
Interesting. And
Come
so it
on,
says,
you don't think I know this?
of course I know you know it. I'm just going, what the hell is
Come
Alloy? Tether Gold has a market capitalization of about $573 million and is backed by physical gold stored in Switzerland, according to the company. What are they trying to do here?
They're trying to launch the first synthetic gold something.
Yeah,
I
whatever you
just
call
read
that
about
state.
it last night, so I am virgin eyes and ears and mind on this, but I think it's called a Tether. That's what they call it, Alloy Tether.
Mm-hmm.
And I think the idea is just to give people more confidence.
I would say more stability maybe
Yeah.
in that side of the market.
Yeah, but I really don't. I'm like trying to think of a use case, and I really am like, okay, why wouldn't I just buy a gold ETF? That literally has already been doing this for 40 years. Why would I go out that has billions of dollars already in it?
Yeah.
Why would I go and buy maybe the fees? I don't know. I honestly, the only thing I can think of is if they can figure out how to pay yield. If they can figure out how to pay yield on a gold asset, we might be talking. We might be cooking with hot oil. That's all I can think of.
Let's shift over to get your take on, are we in a tech bubble? The market cap of technology stocks as a percentage of the S&P 500 just hit a record 44%. This percentage is now 12% higher than after the 2000 dot-com bubble peak of 32%. Over the last 10 years, the share has more than doubled. Are we in a bubble based on those historical statistics, or are we in a different market where that data is different because of the variables in this new market cycle?
Yeah, the second part. There was no AI, and I said it in January this year that I thought AI was probably going to be our catalyst for the year, and I didn't know that was going to be the catalyst for the year. I thought it was going to be one of. But that's 7/10 of the story right now is AI. People are trying to say AI just like they were trying to say DEI a few years ago.
Mm-hmm.
So it's very popular. I think we're just the beginning of it. It's the equivalent, in a sense, of the dot-com era, and that we have a brand new technology. We've referenced this before, though, how it's different. We have tech companies that made it through the dot-com, that were part of the dot-com, that have market capitalizations of $1, $2, $3 trillion plus dollars that are a part of this catalyst now. It's not, hey, we're Netscape. Hey, we're brand new company B. Hey, and nobody knows what they're doing, but everybody's getting into the water so you can get the wettest. So that I don't think we're doing now. You have Oracle, you have IBM, you have NVIDIA, you have Amazon, you have Microsoft, you have Apple, and they're all figuring out how they can use it in their already established verticals of cash. How can we integrate AI into our already established business plans that are already profitable to make them more profitable? It's a different story than the internet is here and it's brand new and nobody knows how to use it yet.
Yeah.
So that's why I just don't think it's the same story. Sounds the same. Easy to bite on if you're fearful, but that's why fear is easy to sell. It's cheap and everybody buys it.
Yep. NVIDIA is now officially the most valuable company in the world, surpassing Microsoft and Apple, as they have really crushed it after their stock split.
Yeah, $3.3 trillion, $3.23 trillion market cap as of market close, maybe $3.3 trillion. It's impressive. And I think we were joking about this when we said it, but I said the price is going to go down again, and all that's going to happen, and I said the word degens, But the degenerate traders are just going to say, oh, wow, it's $100 a share again. Time to pile back in so we can do this right all over again. Mm-hmm. And sure enough, that's what's happening. NVIDIA is trading, what is it trading at market close today? It's split at, it's 135.58 at market close today. I don't see it slowing down, man. I don't. They can keep pumping profits out, especially at those data centers. The margins are nuts.
Yeah.
They're hundreds of % of profit.
Crazy.
So I don't see it slowing down. In fact, I wouldn't be surprised if NVIDIA starts going and acquiring companies at this point because of how big they are. They can start buying up competitors or buying up little niche markets that they can add on to their distribution channel. So I'm hoping it continues to go, but I feel confident that we got another 1 to 3 years left moving in that bad boy.
Love that. Foreign holdings of U.S. stocks has reached an all-time high allocation of 60%. In 4 years, the percentage has increased 15% and exceeds 2000 dot-com bubble levels. Since 2009, foreign holdings of U.S. equities has doubled. It seems to be that if we're in a bubble, we've got a lot of people that are going to be on this ride with us. And if anything, you would think that those holdings of U.S. financial assets as a backstop to our economy, our market, and the U.S. dollar. Am I reading that wrong?
No. Shoot, why do you invest? Because you don't believe in something?
Yeah.
I put my money where my mouth is.
Yep.
So I don't know. I think people are grasping for straws at this point because people thought it was such a layup to call for another recession or to call for a recession and ignore an actual recession in 2022. But that's smart money can't be fooled like that.
Yeah.
And it's why you got to be careful listening to headline news and bag pushers because the past 2 years, bears have been getting smoked. I don't even know how you can still say, oh man, we're 18 months into a bull run and now we're going to pull back. Those people are just going to be wrong and they'll eventually be right.
Sure. Yeah.
They will. But when? I don't know. Probably years from now.
Yeah. What are your thoughts on Netflix? Netflix has announced certain cities that they plan for in-person experience venues. So they're getting they are transcending beyond just streaming.
The TV.
And I think personally it's a brilliant play.
Of course it is because people still yearn to go and connect with others in person at events.
They have already such a strong foundation and brand in the entertainment space that if they can, and obviously this will be a big asterisk next to whether or not it'll be massively successful, is they have the ability to put on Disney-like venues.
So they have the money
for it, right?
They are bigger than Disney market cap. So that's a lot of people don't wrap their head around.
That's what I'm saying.
They may not have the revenue, but they have the.
So I think they have an insane opportunity to go in and compete with other big brands because there's really not a lot of
aren't they already
experiential hospitality brands
Disney
in physical spaces.
They already did because that's why Disney has Disney Plus.
Exactly.
Yeah, so they already proved that they are the market leader in that segment.
This kind of shows me that they're going, we think we have the ability to go and take a little bit of market share in this space with our experience, with our capital.
You're talking about like the theme park? Like a Universal Studios type deal?
It could transition to that, yes.
Yeah.
I think they're going to start with maybe smaller footprints, but I think based on what kind of experiences they do within those footprints, they could completely do something at scale. But I think this is their testing grounds to that.
Think about if they had like Universal Studios and they had the Squid Games experience.
How many just Netflix-owned brands they could go and create pop-ups for, and how many people would go, sign me up. I want to go experience that. I'm a ride or die fan because it's all IP, right?
Look at Hollywood, the Universal Studios when they implemented Harry Potter.
Exactly.
And they were like, oh boy. And then when they did that, Disney saw it and was like, we got to make Spider-Man. Because when they were doing like their own brand stuff, they're like, we got to go buy some Marvel stuff.
I'm excited about this.
Yeah,
so when I
too.
saw this headline, I was like, one, I think it's going to be cool for people that just love that kind of stuff.
Yeah, and you're like, and I got kids
kind of
and I'm about to be going.
But then that being said, I also think it's a brilliant move by Netflix of going, we're not just all digital. And we think we can compete in the physical too. And I think they have the ability to make some mistakes and come in and still weather the storm and absolutely kill it. So I'm going to be paying attention to that one for the long term.
I will keep my eye on it as well.
That being said, just wrapping up on some commercial. Not a lot in single family. Inventories month over month, week over week still continue to increase. Nothing to write home about as we've tracked the data pre-inventory levels, still 35+% below that. Again, still low inventory, as you mentioned. Interest rates starting to drop down a little bit. I still think, again, it's a great time for people to get in no matter what, being that over time, you're going to be able to refi down to a lower rate. So I wouldn't wait for the rate to get better. Agreed. And we saw that on the commercial side, Fitch Ratings revised its office delinquency forecasts up for 2024 up to 8.4% and 2025, 11%. So we still see some pretty big distress on the horizon. We'll be paying attention to that in office specifically. And then net retail. Retail has been one of the stronger performers along with industrial, of course, multifamily. Yeah, those have been the three juggernauts of commercial, but net retail absorption is approximately 30 percentage points lower than 1 year ago. That's a nothing burger in my opinion, very small. And limited availability of retail spaces keeps vacancy rates low. Those are hovering nationally around 4%, which historically is the lowest rate among any sector in the commercial real estate market right now, and for retail specifically since they started tracking this data. So retail's still doing very well. You got your neighborhood shopping centers, you got your neighborhood strip centers, you got your big box national anchored tenants and brands, and all of those for the most part are doing really good. So it's good news overall for commercial real estate investors in that product. Obviously, you got multifamily, you've got office. Those are the ones that people are really watching, being that there was a lot of debt obviously taken on that particular product over the course of the last few years post-pandemic, and that is short-term debt that is obviously coming due. Otherwise, that's all we got for you guys this week. We appreciate you guys tuning in to another episode of Money Moves. Don't forget to subscribe. If you guys enjoy the show, you enjoy the content that we share, if there's anything you want us to cover, be sure to shoot that in. And also, don't forget to leave a review. That's how we continue to share and spread the message, to get you guys participating in these financial conversations with us, as we love geeking out on all things stocks, real estate investing, personal finance, and of course, politics, policy. A lot of this stuff ties into what the stock market does, what interest rates and the Fed does, what the real estate market does. So we like to track that as well, and it keeps things a little spicy. That being said, we appreciate you guys joining us for this week's episode. Don't forget to tune in next week. Until then, keep investing in yourself and your wealth on your march to $1 million and beyond. Cheers.
Cheers, y'all.